Hi there, Steve. I'm going to start in the United States with the Wall Street trader with the fabulous nickname Fabulous Fab, but not such fabulous circumstances for him and his fraud case.
No, indeed. Fabrice Tourre, the former Goldman Sachs vice president, has been held responsible for his role in misleading investors in a $1 billion mortgage deal. Now, the civil case was taken against him by US regulators. A jury found him liable on 6 of 7 counts of misleading investors. Oliver Farry has the details.
It is a sharp fall from grace for the man who called himself Fabulous Fab. On Thursday, a New York jury found former Goldman Sachs trader Fabrice Tourre guilty on 6 of 7 counts of fraud. A major victory for the Securities and Exchange Commission, which has until now struggled to bring Wall Street fraudsters to justice.
So we're gratified by the jury's verdict, and we appreciate their hard work, but beyond that, I don't have any comments.
The 34-year-old Frenchman was accused of defrauding investors in a subprime vehicle called Abacus he had concocted. Tourre was left to fight alone after his former employer Goldman Sachs settled with the SEC in 2010 without admitting guilt. The investment bank covered Tourre's legal fees. The SEC demonstrated that Fabrice Tourre knowingly swindled investors and that in an email dating from 2007, he foresaw the collapse of a market out of which only he would pull through.
Only potential survivor, the Fabulous Fab, standing in the middle of all these complex, highly leveraged, exotic trades he created without necessarily understanding all of the implications of those monstrosities.
As the case is a civil one, Tourre will not be given a prison sentence, but is likely to face a stiff fine and a possible life ban from the financial services industry.
There we go, doing plenty for the image of bankers around the world. They're Fabulous Fab. Steve, we're going to go to Australia next, and the government unveiling a mini budget ahead of elections coming up in September.
Yeah, the Australian government's plans include a controversial bank deposit tax. The Australians holding with more than 250,000 Australian dollars in their accounts will be taxed 0.05% from 2016. That's forecast to raise the government 733 million. That's just a drop in the ocean, though, compared to the budget deficit, which is now at 30 billion Australian dollars, around 26 billion US dollars. That's been widening as commodity prices have fallen, and also the effect of the Chinese slowdown has hit the Australian economy too.
But in June, a little bit of a bright spot coming from the tourism sector.
Yes, a record number of visitors to Australia in June, helped, of course, by the British and Irish Lions rugby tour. 560,000 people travelled down under during the month of June. Tourism Australia says that brought the economy the equivalent of 138 million US dollars.
Some good news for Australians there. Well, back here in Europe now then, the head of the European Central Bank trying to give the markets a little bit of certainty.
Mario Draghi kept the benchmark interest rate in the Eurozone at 0.5% after the bank's meeting on Thursday. But he did say that the bank was nowhere near slowing down its stimulus measures. This, of course, after the fears on the markets when the Federal Reserve warned that it might taper off its monetary stimulus programme. No sign of that happening in Europe for the moment.
OK, well, the markets don't really look to be showing any signs of fears or worries today, do they?
No, certainly after those comments yesterday, Wall Street hit record levels on Thursday. A tepid start to trading here in Europe, though. The market's in the green, but only just. Spain opening in positive territory after the news. The number of people out of work there fell again in July to 4.7 million. In London, one stock to watch out for in the FTSE 100 is Royal Bank of Scotland, which has opened down despite a return to profits in the last quarter. 1.5 billion euros, in the first half of the year. The largely state-owned bank also announced its new CEO, its former head of retail banking, Ross Ewan. Now, the positive lead from the markets in Wall Street also helped trading in Asia, as you can see. Japan's Nikkei leading the gains also after some good corporate results. Well, the latest of those stellar corporate results has come from the carmaker Toyota. The Japanese firm nearly doubled its profits in the second quarter of the year to $5.64 billion. The results helped by the falling value of the yen, which has boosted many Japanese exporters. Toyota says it expects to produce a record 10 million cars this year.
Europe's biggest insurer, Allianz, has reported a 27% jump in net profit to 1.6 billion euros. The company says better than expected returns from its property insurance sector helped to boost the result. The firm is on course to reach its goal of 9.2 billion euros in operating profit this year.
And the airline group AIG has returned to profit in the second quarter after Spanish carrier Iberia showed signs of recovery. IAG, which also owns British Airways, reported an operating profit of €245 million. That's compared to a loss of €4 million for the same period last year. Iberia is undergoing a massive restructuring programme, which involves more than 3,000 job losses.
Okay, finally now, a London fashion designer who's resorted to a chilled way of getting his designs to the high street, one could say. Tell us more, Stephen.
Yeah, the heat wave we've been talking about in this part of the world has, of course, hit the UK as well. So designer Henry Holland decided to take an ice cream van to central London to show off his summer collection. He was able to take it to Covent Garden, right in the centre of town, and sell his clothes from there, of course, avoiding those extortionate rents in that particular part of London. But the van itself is presenting some difficulties in terms of a retail space.
The pros and cons of having an ice cream van, well, the cons are that there's an engine to take into consideration and a freezer, which I've recently found out. But the pros is that, setting up an ice cream van is such a lesser cost than setting up a store in bricks and mortar, and I'm able to have this physical presence on the high street from this really, eye-catching way with much less of a budget.
I like that very much. Hope they bring it over to Paris. Thanks very much, Stephen Carroll there with the business news. It's time now for us to check out the top stories in the international press.